Welcome to TaxLawGH and welcome to our next video in the tax administration series. In this video, we talk about practice notes, private rulings, class rulings, and then we start a discussion around penalties and interest for failing to comply with a tax law. Should be very informative. As usual, this is an exam-rich area, so if you're studying for exam, please listen carefully. First thing we need to look at is practice note. What is a practice note? I'm saying to achieve consistency in the administration of tax laws in Ghana and to provide guidance to persons who are affected by the laws, including the officers themselves of GRA and other taxpayers and other persons, the Commissioner General may issue something called a practice note. It's a document. I'll show you how it looks like shortly. And in this document, the Commissioner General will set out his interpretation of a certain provision of law that has been passed by Parliament. So remember, practice note is issued by the Commissioner General to guide taxpayers, officers of GRA, and all other stakeholders on what he feels, what he believes a certain section of a certain law should be interpreted as. Remember, it is the Commissioner General's opinion on a certain issue. It is not law per se, as we'll find out. It is binding on the Commissioner General and not the taxpayer, because that is his opinion, that is his view. So a practice note may pertain to a single tax law or to multiple tax laws, and he may issue multiple practice notes with respect to the same tax law. So as you find out shortly, there are many practice notes. There's a practice note on withholding tax, there's one on capital allowance, there's one on employment income, there's one on VAT flat rate scheme, there's so many practice notes. There's one on finance cost limitation, there's one on charitable organizations. Like, there are several practice notes out there. And in those documents, the Commissioner General has given his interpretation of how taxpayers need to treat those different items for tax purposes. Key takeaway point here is that a practice note is binding on the Commissioner General until he revokes it, until he calls the document back, until he comes out to say, I said this myself, it no longer applies. So remember, it's binding on the Commissioner General. A practice note is not binding on persons affected by the tax law. So if the Commissioner General issues a practice note and he says you should do something in a particular way, it is binding on him. You can hold him for his word. That's what this provision means. Binding on him means you can hold him by his word and said, you said this, so I'm holding you by your word. But it doesn't bind you, the taxpayer, because you are just a mere reader. Remember this. So this is the Commissioner General's interpretation. It is not the law. The laws are passed by Parliament, but this is the Commissioner General's interpretation of the law to guide taxpayers and other key stakeholders. Remember this. How does he issue practice notes? We are saying that he may issue a practice note by publishing the notice in something called a gazette or on the GRA website, which is what he usually does, or in at least 2 national daily newspapers of national circulation. I've seen that once in the dailies before. So he comes out, the one on VAT flat rate scheme, I saw it in the dailies. He came out saying there's a new practice note to taxpayers, so you should take note of the provisions. Then it's on the GRA website. They upload them there. A practice note shall have a number, I'll show you one shortly, and a subject heading by which a practice note can be identified. So he numbers all the practice notes with a certain number so they can identify them, and it states clearly the subject it covers, so you know that when you pick this up, it covers this area of tax. Then it applies from the date specified in the notice when he issued it, and if no date is specified, then when he published it in the gazette. Then the law says he's required to make practice notes publicly available. That's why it's on the GRA website. Let me show you how practice notes look like. So these are 2 practice notes that were issued in 2020. He issued a total of 9 practice notes in 2020. These are 2 out of 9. I just chose them random. You can see on the left, we have practice note on bad debts under the Income Tax Act 2015, Act 896. So here, this is how it looks like. Remember, I just said that it will state clearly the title and what it covers. Then I told you it will also be numbered. So you can see practice note number DT 2020-002. Then it states clearly the date of issue, 28 April 2020. The one on the right is practice note on clothing allowance under the Income Tax Act. Remember, we said it can cover multiple areas of a single tax law or different tax laws. So here he chose just clothing allowances to write on, so that people who are receiving clothing allowance will know his view on how clothing allowance should be taxed. So here it has its own number. You can see the one on the left is DT 2020-002. The one on the right is DT 2020-001. So remember, unique number, but they are issued on the same date. So remember, this is how a practice note looks like, and it is on the GRA website. How does he amend or revoke a practice note? We are saying that the Commissioner General may amend or revoke a practice note in whole or in part by publishing a notice of the amendment or revocation in the Gazette, on the GRA website, or in the same 2 daily newspapers. So he publishes and says, I am amending a portion, I am changing a portion of practice note. Revocation means he's saying that I am calling back that practice note. I don't want it to apply again, so I'm revoking it, I'm cancelling it. So amendment means he's changing just one part of it, but the document still stands. He just changes a particular point or point or whatever provision he mentioned in the practice note. Revocation means he's cancelling it entirely, right? The subsequent enactment of a law or legislation or issue of a practice note that is inconsistent with an existing practice note revokes the existing one to the extent of the inconsistency. What does this mean? If, let's say, he issues a practice note on what I just showed you, clothing allowance, then the new law is passed by Parliament that talks about clothing allowance in a way that is different from what the Commissioner General said. The new law will be the supreme law or the supreme ruling. What this means is that any new law that comes out that is not consistent with an old practice note revokes the existing practice note to the extent of the inconsistency. So new law comes, changes the treatment. Whatever the Commissioner General said about it, based on the old provision of law, no longer stands. The new law is what is supreme. If he also issues another practice note, let's say he issues a second practice note this year on clothing allowance, and that new practice note in this new year is inconsistent with the one he issued in 2020, then the new one will revoke the old one to the extent that they are inconsistent with each other. So where they don't agree, the new one will take precedence. That's what this is saying over here. Then we are saying any amendment or revocation has the effect where bullet 1 applies. So bullet 1 is where he himself revokes it by notifying in the dailies or in the Gazette. From the date he specified in that notice, that is when it becomes effective, the revocation or amendment. Where is a new law that came to revoke it, or it's a new practice note, there is the date that the new law was passed or the new practice note was deemed to apply. Remember this. So practice notes can be amended or revoked. Then we are saying the amended or revoked part of a practice note continues to apply to arrangements that started before the amendment or revocation, but it doesn't apply to arrangements that started after the revocation. So this is just simple before and after case. We've looked at practice notes. That is a Commissioner General's interpretation on different areas. He writes on it to people to educate them. How about private rulings or class rulings? These are different, but they apply in a similar way. So we are saying that the Commissioner General may, on application in writing by a person, issue to that person a private ruling or a class ruling, setting out the position of the Commissioner General regarding the application of a tax law with respect to an arrangement proposed or entered into, in the case of a private ruling by that person, in the case of a class ruling by persons in a specified class. Here, dear viewer, let me tell you the difference between a practice note and a private ruling. For a practice note, it's like nobody requests from the Commissioner General. He wakes up one morning and says, I want to educate the public on bad debt. I want to educate the public on clothing allowance. I want to educate the public on capital allowance. So whatever it is, he writes on it and issues it. It is binding on him until he revokes it. It's not binding on him, the taxpayer. For a private ruling, difference between private ruling and class ruling is, private ruling is for one person. One person writes to him and says, I want your view on this. Class ruling is for a group of persons. So a very recent case that was in December 2020 was the Ghana Association of Bankers wrote to the Commissioner General for his view on clothing allowance for bankers. So the Commissioner General issued the class ruling to that association of bankers. So in that case, it applies to a group of people. So take note, private ruling is typically for one person, class ruling is for a group of persons, but the provisions are the same for both of them. It's just the difference between who it applies to. One person in the case of private ruling, and then a group of persons in the case of class ruling. So A private or a class ruling may apply to multiple arrangements and multiple tax laws. So here, key thing to remember is that, like I said, practice note is issued by the Commissioner General. Nobody applies for it. The private ruling or class ruling, you apply to the Commissioner General and ask for his view on something. So let's say you want to undertake a particular transaction. You want to know what his view is. How does he prescribe, or what does he think the law's position is regarding that thing you want to do? Should you apply 10% or 5%? You write to him to ask for his ruling. Then he writes to you telling you what the law says it should be. So take note, private rulings and class rulings are based on your application to him, writing to him for his opinion. Practice notes, he issues them just to educate people on what he thinks it should be. So we are saying, subject to the below, a private or class ruling is binding on the Commissioner General. So here, similarity between practice notes and then private and class rulings. They are both binding on him, except that for the private or class rulings, there are conditions that must be satisfied before it binds the Commissioner General, right? So it's binding on the Commissioner General with respect to the application of law. In the case of what? For the applicants, in the case of what? A private ruling, and then in the case of what? A class ruling for the group that applied. But there are conditions that must be satisfied. For example, a private or class ruling is binding only. First condition is if before the issuance of the ruling, you, the applicant, you made a full and true disclosure of all aspects of the arrangement. So don't hide a particular fact that may be important to him making a decision. So if, let's say, you want to decide, let him know, is the business between a resident and non-resident? Are you paying 10 million or 100 million? Have you been doing it for 5 months and not 8 months? Like, disclose everything. Let him have all the details before he can issue this to you. If you disclose everything fully, then when he decides, it's binding on him. But he finds out later that you didn't tell him some parts that was relevant and was material, then it's not binding on him. You can't hold him to his word if he did not disclose in full. Next is, the arrangement actually proceeds in all material respects. So whatever you said you were going to do in the application for which he gave you his opinion, you actually do it. So let's say you said you were planning to build a factory in Kaswa. You wanted to know the rate of tax that will apply for that area. If you don't go ahead to build a factory in Kaswa and you build it in Medina or Adenta, then it is not binding on him because you didn't follow through with what you said you would do. That's what we're saying here. Then, if the application is headed private ruling or class ruling, as the case requires, then it's binding on him, right? And it's binding for the period specified. So take note, this is also a very common exam question. Under what condition will a private ruling be binding on the Commissioner General? These are the answers. You make a full and true disclosure of all aspects of the arrangement relevant to the ruling. Then you actually proceed with the arrangement in all material respects as you describe in your application. The application is headed a private or class ruling, and then it's binding for the period specified in the ruling. Remember this, very, very important. Still on this, we are saying that the private or class ruling does not bind the applicant or another person. So you, the person applying, doesn't bind you. It binds the Commissioner General if you have met the conditions I just mentioned, but it doesn't bind you, the person. It also does not bind the Commissioner General with respect to any other person other than, in the case of a private ruling, the applicant, or for a class ruling, the persons in the specified class. So take note, if you see someone's private ruling, you can't say it binds the Commissioner General because he wrote it to a particular person. There's a common practice out there where people take a taxpayer's private ruling and says, okay, if the Commissioner General says the rate is 5% for you, then I also apply it. No. The Commissioner General gave the ruling for that particular, to that particular taxpayer based on the particular information they gave him. So if you decide to rely on that information, take note, it is not binding on the Commissioner General. As the name implies, it is a private ruling. It's private. It's between Commissioner General and that person. So if you are not that person and you choose to rely on it, Commissioner General can tell you, I was not talking to you, I was not referring to you, so you are in trouble. I wasn't even intending to send you this information. So you can't rely on someone else's private ruling. If you want a private ruling, write your own letter and go and request for your own private ruling. Take note. It doesn't matter how similar your business is or you think you are in the same industry. Private rulings are private. It's for that person only. It doesn't bind Commissioner General for you, the third party. Then for class rulings, the same thing. For example, the one for Ghana Association of Bankers. If people who are in Ghana Union of Traders Association decide to rely on it, it will not bind the Commissioner General because they are not bankers. If Association of Insurance Companies or insurers in Ghana decide to rely, it will cover them. If chartered accountants or members of the ICAG decide to rely on it, it will not apply to them because they are not members of the Ghana Association of Bankers to whom the class ruling was issued. Take note, it applies to those who wrote the letter to him only, and it binds him for them. Then a private or class ruling is not subject to challenge. You can't challenge it. You came for his opinion, he has given his opinion. So why are you challenging him? That's what he thinks, right? But a person may challenge a tax decision that is made with respect to that arrangement based on the private ruling. So let's say you write to him for a private or class ruling, he gives you his opinion. You can't challenge the opinion. That's his view. But if he takes a decision that affects that transaction based on that view, then you can challenge the tax decision in court. So in our earlier videos on tax administration, we spoke about what? Dispute resolution, where you can go to court, and I mentioned the newly introduced Independent Tax Appeals Board. If you've not watched that video, please do. It's essential to know what has changed in our tax dispute resolution space. So take note here, you can't challenge a private or class ruling, but you can challenge a tax decision that is made on that transaction based on the ruling. Then a class of person includes persons holding a particular class of membership interest in an entity, and persons that in the opinion of the Commissioner General may be identified as commonly situated with respect to a particular application. So if you're in a group and he knows you guys are similar, you do the same thing, particular association, body, organization, then you can be called a class of persons. Then Commissioner General may charge a fee for a private or class ruling. He's taking his time to look at your issues to give you his view. So he may charge a fee. The law says may. It's not mandatory, right? Then a fee, how will he compute it? It's based on the cost structure of a similar legal or tax advisor and will be paid before the ruling is communicated to you. So if you want to do the calculation, you can say if you went to KPMG, if you went to PwC, if you went to EY, if you went to Deloitte for this same ruling, how much would they have charged you? Or if you went to a law firm for this same ruling, how much would they have charged you? Then you use that to benchmark and then charge you accordingly. Now let's look at cases where he can refuse to issue with the private or class ruling. He can tell you, you know what, I'm not going to mind you, just leave my office or take your letter away from here. Right? The Commissioner General may refuse an application for a private or class ruling if, for a private ruling, that arrangement has already been the subject of a tax decision. So let's say you are writing to him about something he has already sent you an assessment on. So let's say you were doing a transaction. He's already told you that you owe him 1 million. You can't go back to him and ask him, I want your view on this thing. No. If that particular thing you want to ask his view on has already been subject to assessment, it's already been decided under a previous tax law, he has given you his view on it, he's told you to pay 2 million or 10 million, you can't go back and ask for a ruling. He won't listen to you. Or if he has commenced an investigation into your affairs in respect of that transaction, or before the application, he has notified you that he has intentions to what? Investigate your business. You can't go for a private ruling. Some people do this as a way to outsmart him. So they hear GI wants to investigate a particular part of their business to impose taxes. Then they go back and ask, okay, I want a private ruling. No. He's saying that once he has begun to investigate you for a particular area, you can't now come and ask for a private ruling. It's too late. Or once he has notified you of his intention to come and investigate or conduct an audit on a particular area, you can't now go and ask for a private or a class ruling. Then also, if Commissioner General thinks that there's a practice note that adequately covers the arrangement, he will waste his time on you. So remember I told you practice notes are written by Commissioner General to give his view to the general public. So let's say you can't go back to him and ask for private ruling on clothing allowance unless the practice note did not cover clothing allowance to your satisfaction and you're able to demonstrate to him that there was an area peculiar to your business that was not covered. If not, he will not mind you. Or you go and ask him about private ruling for bad debt. He has already written a practice note for bad debt. So if you come for a private ruling or a class ruling on bad debt, he will deny you unless you're able to prove that it is not covered in what he has already written. And it's usually extensive. He writes a very extensive document. So he will tell you once there's a practice note, you won't get a private ruling in most cases, unless your issue is very, very specific and very unique. right? Next is if the application is frivolous or vexatious. You are just coming to waste his time with a complicated, overly complicated structure or whatever. He will just not give you the ruling. The arrangement has not been carried out, and there are reasonable grounds to believe that the arrangement will not be carried out. So he feels that he's not going to give you a ruling on hypothetical issues. You can't go to him and ask him, oh, what will be the tax impact if I decide to do this, or if I decide to do this? Please, that is the job of a tax consultant. Don't go to a Commissioner General and ask for scenarios. So scenario 1, if I decide to import this. Scenario 2, if I decide to export that. Scenario 3, if I decide to do this. No, he's not there to be your consultant to give you opinions. It must be an arrangement you have entered into, or that you propose to enter into, and you are sure you will do it, and you actually proceed. Remember I said, before a private ruling or a class ruling will bind the Commissioner General, you must have what? First disclosed everything, and then next what? Actually proceeded to undertake that transaction. So if he feels that you will not carry out the transaction, and he has grounds to believe that you will not even do it in the first place, then he won't bother with you. He won't issue you with any practice and private ruling or class ruling. Also, if the applicant has not provided him with sufficient information to make a ruling, he will reject your application. So let's say he asks for a number of pieces of information to make the ruling, and you don't provide it, he will reject your application for the ruling. And then if there's a fee he prescribes, like I mentioned not too long ago, and you've not paid the fee, he will also not issue the ruling to you. Finally, if in the opinion of the Commissioner General, it will be unreasonable to comply with your application, having regard to resources needed and any other matters, then he will also not listen to you. So let's say you write to him about, what's the weirdest one you could ask? Taxation of what? Spaceships in Ghana. I mean, how relevant is that to taxation in Ghana? Do we have companies that build spaceships and go to Mars and Jupiter in Ghana, you know? So if it's an area that he feels that he will need a lot of resources, get expert on spaceships, how they work, the rules around sourcing, he will just not mind. So I don't think that was the best example, but if it's unreasonable to him, in his opinion, to comply with your request, he will not listen to you. So where he refuses an application for a private or class ruling, he will within 30 days of his decision serve you with a notice in writing telling you why he has refused to issue you with the ruling. So take note of this one. Then what if he decides to issue you with a private or class ruling? Like he feels you deserve it, so he will issue you with the ruling. So a private or class ruling is issued, where for a private ruling he serves you with written notice. So because it's private, he writes a letter to you clearly, address it to you and tell you, this is to you, this is my ruling. So once you get that letter from him, you know that he has approved your request for a ruling, this is your ruling, right? But for a class ruling, then he will serve a written notice to the applicants, the person who made the application on behalf of the group, and then he will make the ruling publicly available. Because it's a group, I mean, it will affect a number of different stakeholders. So for example, the one on the Ghana Association of Bankers is publicly available. I got it on one WhatsApp group, right? Because it's a class ruling. But usually private rulings are for one person. So before you get a private ruling, then you must have known the person to whom it was issued and they share a copy with you, right? It's not publicly available like class rulings. But take note, you won't find class rulings on GRI website. Take note of that. It's publicly available means you can get access to it by asking someone who knows someone, but you won't find it on GRI website. It's not mandatory for them to disclose it. So the Commissioner General may base a private or class ruling on assumptions about a future event that he considers appropriate. He can take into account a number of factors in the future that he feels will apply to the ruling. Then, when issuing a private or class ruling, Commissioner General will set out the matters ruled on. Clearly, he will tell you, I covered capital allowance, I covered this, I covered that, I covered withholding tax. He will set out the matters clearly. He will identify the tax laws he covered. So was it the Income Tax Act, Act 896? Was it the VAT Act, Act 870? Was it the Customs Act? Like he mentions all acts he covered. He will mention the tax period that his ruling covers. He will mention any arrangements that the ruling relates to and any assumptions. Then for a private ruling, he will identify the applicant with the person's taxpayer identification number, their TIN. Take note. Then, in the case of a class ruling, he will refrain from revealing the tin of that person or the identity of the class of members, except with their consent, because it's kind of going to be a publicly available document. He can't go about disclosing your tin to everybody. So he tries as much as possible not to disclose your tin in the case of a class ruling. Remember, we said practice notes can be amended or revoked, right? What are the provisions around revocation and amendment of private rulings and class rulings? So we are saying the Commissioner General may, for a reasonable cause, amend or revoke a ruling in whole or in part by written notice. So if it's a private ruling, he will write to you to revoke it. Don't forget that this one, he wrote to you to give it a ruling. So if he's revoking it, he will write to you to revoke it. And then in the case of a class ruling, he will serve the applicants with a written notice once again, and then he will make it publicly available, because the manner in which he issued it is the same manner in which he revoked. If you remember, for practice notes, we said he would issue or publish it in a gazette, on the GRA website, and then in 2 daily national newspapers when he's issuing. Same when he's revoking or amending. What did the law say? He goes back there to tell people he has amended or revoked. The medium you use to announce is the medium you use to withdraw. General principle in law. So here, practice and private ruling, he writes to you to let you know. Class ruling, he writes to you and then he makes it publicly available. The subsequent enactment of a law that is inconsistent with the private or class ruling revokes the ruling to the extent of the inconsistency. Same as the practice note. So if a new law is passed by Parliament, a new legislative instrument is passed by Parliament, and that new law is inconsistent with what he said the ruling should be in that private or class ruling, this means that the new law will take precedence, the new law will take effect, and it will revoke the private or class ruling to the extent of the inconsistency. Then how does amendment or revocation take effect? We are saying that amendment or revocation in whole or in part has effect from the date specified in the notice or the date the new law came into effect. Similar provision under the practice note issue. Then, just like under the practice note, the amendment does not apply to arrangement that commenced before. Then it applies to what the amendment or revoked parts does not apply to arrangement commenced before. Yes, the amendment or revocation, and it applies to arrangement that commenced after the amendment or revocation. So it's just timing. I mean, if we revoked it in December, then all things that came after December, we can say it applies. The ones that came before the change doesn't apply. Just plain common sense. So now that we've looked at practice notes and private rulings, let's look at some basic interest, penalties, and offenses you need to know at this level. So first thing is interest for underestimating income tax payable. Interest for underestimating the income tax payable. So if you underestimate income tax payable, there is interest. Interest, like I mentioned earlier, is an amount of money you need to pay to the Commissioner General for delaying the time value of money. So we are saying where an estimate or a revised estimate of tax payable by a taxpayer with respect to chargeable income is less than 90% of the correct amount. So take note. Under income tax, there's something called self-assessment. We'll have videos on this concept. So self-assessment, if you are required to assess yourself for taxes, it means you make an assessment, then on a quarterly basis, you make payment to Commissioner General. We are saying that if at the end of the year, how much you said you estimate to pay and how much you are actually supposed to pay, the margin of error is more than 10%, you have broken the rule and will charge you interest on the difference. That's all. So you are given a 10% margin of safety to make mistakes, for which mistakes, penalties, and interest will not apply. But if you breach this 10% margin of error, then we say you are not accurate enough. We gave you 10% room to operate, you couldn't even do it. And it's kind of interesting because the law allows you to revise your estimate as often as you want within the year to ensure that you get the right amount. So if you don't get the calculation correct, then it's only fair that they impose interest. So you have a 10% margin of error. Take note, you can have you have 90% to be correct for. I say now where you are outside this 10% margin of error region, then you are liable to pay interest for the period from when your first installment was payable. Remember I said installments are payable on a quarterly basis. So if your year end is 31st December, then your first installment will be paid by the end of March, the next will be paid by the end of June, next will be paid by the end of September, then end of December. So you are allowed to pay your quarterly installments and then revise them as and when you feel they are changing, right? So from when the first installment was due until the due date by which you filed a return and paid any actual amount. What is the interest amount? It is 125% of the statutory rate and compounded monthly. So I mentioned in the previous video before this that statutory rate here means the Bank of Ghana monetary policy rate, which as of today is 14.5%. So 125% of that rate compounded monthly and applied to the difference between two figures. First is the 90% of the amount that you would have paid by way of installments and the actual tax you paid by installments. So it's a simple math. The formula is the 90% of the total amount payable minus actual tax paid by installments into brackets times 125% of monetary policy rate compounded on a monthly basis. Obviously, don't bother ahead about it. We'll have, like I said, exam questions and answers to follow, which will solve a question for you to see how the math is done. So just know that for now, what the rule is 125% of monetary policy rate compounded monthly and applies the difference between 90% of the amount payable and the actual amount you paid by way of installments during the period. So take note of this one, what you need to know for now. Then what about when you fail to pay any other tax apart from the ones by self-assessment? So let's say failure to pay VAT on due date, failure to pay customs duties on due date, failure to pay any tax on due date. What is the interest for failing to pay that tax? So where you fail to pay a tax by the due date, you are liable to pay interest. Similar to the one I just mentioned, it is still 125% of the statutory rate, which is the BOG or the Bank of Ghana monetary policy rate, compounded monthly and applied to the amount outstanding. So if you are supposed to pay it in January and you didn't pay all the way to October, you will pick 125% of the BOG rate on a monthly compounded basis and apply to the amount outstanding until you make payment. So it's quite a lot of money. I've seen tax assessments in practice where the interest amount is sometimes twice the principal amount for tax. So interest is very hefty. You should try and avoid as much as possible. Like, do the right thing and not be leveled with interest. That's what I mean. So it can be very punitive because it's compound interest, not simple interest. It's a lot of money. We are saying that for the purpose of calculating interest, tax is payable in the case of an adjusted assessment on the date the tax is payable. Then in any other case, we use the rules for time for paying tax. Don't bother too much. So just know that for computing interest for failing to pay a tax, it is 125% of the statutory rate compounded monthly and applied to the amount until paid from the period it was due to the date paid. Here we are covering the ones that will be tested. The examiner will test you on what I just mentioned, interest for what? The underestimation. Then this one is also a very examinable, interest for failing to pay a tax. How about the next one? Oh, and very important before we move on to the next one, where a withholding agent is liable for interest for failing to pay withholding tax. You cannot go and recover the interest from what the person subject to withholding. So let's say I was supposed to withhold on you watching the video 3% for the supply of goods, right? I failed to pay the withholding tax to GRA, or yes, so I'm the agent, I've withheld on you, I failed to pay the tax to GRA on time, and GRA is charging me interest. I can't come back to you and come and collect the interest from you. They are saying it's none of your business. I should have complied, so I am liable. Take note. You can't recover withholding, you can't recover interest on someone you should have withheld on. Let's look at another penalty that will be examined. It will be in your exam for sure. If you fail to maintain documents accurately. Remember, in one of our videos in this same series, I think it was the third or second, I'm not too sure, we mentioned penalties for, we actually mentioned the provision to maintain documents, right? You must keep documents in Ghana, if you remember that provision. And remember, I mentioned the 6-year period. Yes, that particular provision. If you fail to maintain documents, then you are liable to a penalty. This is not interest. Take note, it's penalty. There are two different things. Interest is interest, penalty is penalty. So what is the penalty? 75% of the tax attributable where the failure is deliberate. When they realize you actually made up your mind not to maintain documents, they just ask themselves, how much tax have we lost because you didn't maintain documents? Whatever the amount is, 75% of that amount is penalty. It's a lot of money. Imagine you didn't keep documents. GRA thinks because you didn't keep documents, we've lost 2 million cedis. 75% of that 2 million cedis is the penalty for not maintaining documents. Don't forget this aside any interest you pay on that amount for not paying, then any penalties for not filing returns. So take note, if you don't maintain documents and we realize it's deliberate, 75% of the amount is payable. Then in any other case, the lower or the lesser of the amount referred to above and 250 cedis. So if they realize the failure to maintain documents was not deliberate, you didn't make up your mind to do that, it was just a mistake, then you can pay as low as 250 cedis. So remember, it's 75% of tax attributable where the failure is deliberate, and then in any other case where it's not deliberate, it's either 250 cedis or the 75%, whichever is lower. Most likely will be the 250 cedis as the amount. So it's not too hefty if it's not deliberate. You can pay 250 cedis easily. So take note of this. Then what if you fail to file a tax return? If you fail to file a tax return, I think of all the things we've discussed so far, the most examinable one is this one, and then the one on interest for failing to file a return, the 125% of the monetary policy rates compounded. So when you fail to file a return, the penalty is 500 Ghana cedis instant. Let's say, for example, VAT returns are due on the last working day of the month, right? You fail to file the return on that date. As soon as you miss that day, 500 cedis is due, instant. Then every other day that you don't file, 10 cedis will start building up. So day one, you miss 500 cedis. The next day, it becomes 510. The next day, another 10 cedis, 520. The next day, another 10, 530, 540, 550, 560, 10 cedis each day until you file the return. Just take note. If you don't file for 3 years, 4 years, 5 years, imagine you add 10 cedis every single day until you file. So it's very, very hefty. But for communication service tax, the penalty is very different. For them, the penalty is 2,000 cedis when you miss it immediately, on that day you miss it. Then every day, you incur 500 cedis. So unlike all other taxes that are not CST, which will be 500 cedis instant and 10 cedis for each day, for CST, when you miss, it's 2,000 instant and then 500 cedis every day. So let's say you miss it, CST returns are also due like VAT returns on the last working day of the month, right? So you miss CST. Let's say you are MTN or Airtel TV or Vodafone or whatever. You didn't file a CST return. You miss 2,000 cedis instant. The next day, 2,500. The next day, 3,000. The next day, 3,500. The next day, 4,000. So this is very, very hefty. If you try this for 3 years, you put your business in big trouble because it's 500 cedis for every single day. And this is done to deter the telecom companies from not filing their CST returns. And the last point to make here is where you fail to submit your tax return 4 months after they impose penalty on you, the Commissioner General may use other means such as prosecution to compel you to submit your return. So let's pause here when it comes to the penalties. Obviously, these are the basic penalties and interest amount. The law provides for others, and we will cover those in a series we'll call Advanced Tax Administration. So under the Advanced Tax Admin series, we'll cover the very detailed tax admin concepts that you need to know. Alright, so for now, let's pause here. If you love this as usual, don't forget to smash the like button. And don't forget to share this video within your network. I'll catch you in our next series of videos.